Internal control risk refers to the possibility that an organization's established internal controls may fail to prevent or detect errors, fraud, or violations of policies and procedures, thereby leaving the organization exposed to operational, financial, and compliance risks. Internal controls are processes and procedures put in place to ensure the reliability of financial reporting, compliance with laws and regulations, and the effective and efficient operation of the organization. However, no system is foolproof, and there is always a risk that these controls may not function as intended or may be circumvented, leading to unintended or harmful outcomes. Management of internal control risk involves a series of strategic actions taken by an organization's management to minimize the likelihood and impact of control failures. This process begins with the establishment of a strong control environment, which sets the tone at the top regarding the importance of internal controls and ethical behavior. Key elements in managing internal control risk include creating and sustaining management commitment to risk management. This involves ensuring that the organization's leadership is fully engaged in and committed to establishing a culture of risk awareness and proactive risk management. It requires clear communication from senior management about the importance of internal controls and risk management, as well as the allocation of adequate resources to support these activities. Adopting a clear risk management structure. Organizations should establish a formal risk management framework that identifies, assesses, monitors, and controls risks. This structure should include defined roles and responsibilities for managing risks at various levels of the organization, from the board of directors down to operational staff. Setting clear and targeted annual objectives. Effective risk management is aligned with the organization's strategic objectives. By setting clear and targeted annual goals, organizations can ensure that their risk management efforts are focused on areas that are critical to achieving their strategic objectives, thereby enhancing the effectiveness of internal controls. Communication with all levels of management. Open and effective communication channels are essential for managing internal control risk. This includes not only downward communication from senior management to ensure that all employees are aware of internal control policies and procedures, but also upward communication to allow concerns and incidents to be reported and addressed promptly. Continuous monitoring and improvement. The management of internal control risk is an ongoing process. Organizations should regularly review and test their internal controls to assess their effectiveness and make necessary adjustments. This includes analyzing incidents of control failures to identify root causes and implementing corrective actions to prevent future occurrences. In summary, managing internal control risk is a dynamic and integral part of an organization's overall risk management strategy. It requires a proactive approach, with continuous monitoring, evaluation, and improvement of internal control systems. By effectively managing internal control risk, organizations can enhance their resilience against potential threats, ensure compliance with regulatory requirements, and ultimately achieve their strategic objectives.